do have people logging on, but we're going to go ahead and get started. Again, this is Charlie Castro. I'm joined today by Lori Graymont, CEO and founder of Summit Assets Group. Lori's the host of Real Estate 360 on the Wall Street Journal Radio Network. And Lori, just thanks again for being here today. I'm going to do a short presentation, just talk a little bit about the current state of the housing market, and then Lori's going to take us through a slideshow, and she's going to talk about Atlanta, Georgia, and what's going on in Atlanta, what Summit Assets Group is doing down there. We are going to take questions at the conclusion of today's webinar, so if you can, please just hold your questions for the end. You can actually type them in anytime you want, actually, but we're going to take the questions after the conclusion of Lori's presentation. We would open up the microphones, but we have too many people on the line today to open up all the mics. So we appreciate you being here today, and we'll go ahead and we'll get started. Again, my name is Charlie Castro. Been around the real estate world for about 5 years now, doing some different things with different REO specialized groups around the country, including Summit Assets Group. And what we're seeing right now in the housing market is we're just seeing the housing market start to come back. If you Google anything at all really about the housing market, you're going to read a lot about the current state of the market, how it's beginning to climb back up. I pulled a number of things off the internet recently. This was U.S. World News Report, I believe, an article just a couple weeks ago talking about the 20 largest metropolitan areas going up 9.3% over the last 12 months. Just seeing continued growth throughout the market. This is the news clip from ABC News. It's actually a transcript talking about 3% in October compared to the last time, this time last year, increase of home sale prices, the biggest year-to-year gain since 2006, and prices jumped in 45 states, led by 21% in Arizona and 13 in Hawaii. Lori's going to spend some time talking about all the reasons you should be investing in the Atlanta market. Atlanta is another market that's got the attention of a lot of different hedge funds and just institutional investors all across the country. I pulled this off the Wall Street Daily Report, April 23rd. This is a really good article to read. If you'd like the link to it, I can certainly send it to you. I'll provide my email address at the end of the webinar. Really good article. What this article really sort of focused in on was what's going on in the marketplace, and are we ever going to see 2005 prices again? And the answer was, yeah, we will see 2005 prices again. It's not going to be tomorrow, but the market is beginning to climb back up. And of course it says, the real estate market is on the path to recovery. There's no better time to buy than now. It's a really good article to read. If you'd like to have the copy of that, I can send you the link to the whole article. National Association of Realtors is something we pay attention to on a pretty consistent basis. Home sales jumped more than 9% in 2012, the largest increase in 5 years. And home inventory levels hit a 5-year low in December. And there's a reason for that. There's a reason why we're beginning to see a dip in inventory availability, and that's what Lori's going to talk to. And it's not just the Atlanta market. We've seen some markets where some folks are just sort of shut out now. Las Vegas has become a market where it's very difficult to identify inventory. Phoenix, Arizona is another area where it's very difficult to find inventory. So you're starting to see inventory levels drop. We have not seen that for a solid 5 years, and there's a lot of good reasons for that. This is still from the National Association of Realtors. 84% of agents believe the real estate values and number of transactions will increase in 2013. 77% believe that new construction will begin to increase. 74% believe that their local economy will improve in 2013. And that's a fascinating quote. I've read that quote, been reading this quote for about 3 weeks now. And it wasn't that long ago when we spent most of our time talking about the economy and the situation with our dollar being devalued, with the fiscal cliff that we were going to drive off. I mean, all these things had negative connotations to the economy, but now 74% of realtors believe, of course, and realtors have their pulse on the economy as well as anyone does, any one group does. They believe that the economy is going to improve in their local market in 2013. And no market's expected to see a decline in home values or real estate transactions in 2013 as opposed to 1/3 of the markets in 2012. Part of the reason we're seeing this is certainly the hedge funds. And if you don't know what's gone on with the hedge funds in this space, the last 18 months in particular, we'll spend a few minutes talking about that. I think this all sort of started about 15 months ago when Warren Buffett was interviewed on CNBC, and he was asked about investing in single-family homes. And he said that he would buy millions of them if it were practical, but that he wasn't very handy. And that sort of frames what I think happened in the months to follow that. You saw institutional investors, hedge fund managers, real estate investment trust groups, folks with big dollars that understand when a market is disjointed and gets disconnected, that there's opportunity there. And you saw these hedge funds begin to take advantage of the real estate market. And there was a lot of reasons for that. And we now interface with these hedge funds fairly consistently. And so we have a pretty good idea what their mindset is. And it's not a whole lot different than what the smaller investor would be interested in, and that is, you're buying at a market where the values of the homes are still down. You can still buy at great value. You get monthly cash flow from it, and the market is appreciating. It's going back up. And so these funds believe that this is the best place to have their money. Matter of fact, I think hedge funds are putting more money into real estate right now than any other single product. Warren Buffett, of course, didn't just say it was a good idea to be in real estate. Warren Buffett then went out and bought Prudential Real Estate. So he's now heavily vested in the real estate market. So essentially what you're seeing here is you're seeing what we all saw as individual investors when the market burst in 2008. What we're seeing now, 2007, 2008, what we're seeing now is we're seeing the institutional money coming in and sort of taking advantage of that market. So this is something I just pulled off the internet last week. If you don't know who Blackstone is, they are the largest hedge fund in the country that's buying real estate. They are pretty much the 300-pound gorilla. We've had very limited dealings with Blackstone. We know very well what they're doing there in most major markets, including Atlanta, buying real estate. Jonathan Gray, global head of real estate, says they bought $1.5 billion in 2012 in foreclosed homes. Then he goes on to say, frankly, buying a home today is pretty compelling, and it certainly is. During a conference call with an earnings call in October, Steven Schwartzman said, $100 billion worth of real estate a week is what they're investing, and there's a reason why they're doing that. They see this as being the safest place to have their money is in real estate. And so the question that we have to ask ourselves is, well, what does this mean for us? What does this mean for Summit Assets Group? What does it mean for other specialized REO companies? What does it mean for them? Is it a good thing or is it a bad thing? And I pulled this off an article I read about 3 months ago. It was actually pretty interesting. It just said, why you should hire a hedge fund buyer today, why it's a good thing for you as a small investor, why it's a good thing to have these hedge funds in the marketplace. And actually, there was 5 reasons, 5 pretty compelling reasons that being in the real estate market is actually a great thing today. And having hedge funds in the market is a great thing today. But I pulled off just 3 of those 5 things that I thought was most important. Number 1, hedge funds are driving up prices. There's just no question about that. They're driving up prices in most all major markets. They're pushing prices up because, frankly, they're buying at asking price or above. In almost every case, asking price or above. And what's interesting is while we look at that and say, wow, we're used to offering a little bit under asking price when we acquire inventory, the way they see it is, well, we're still buying in a market that's still down. It's still a down market. We're still buying at great value. So while you may see it as being, paying at asking price, in reality, we see it as being a great value. The second thing is they're buying in undesirable neighborhoods. They're certainly buying the bulk lists and tapes from the banks, something that we don't do. I can tell you that I work with Summit regularly on the acquisition side of it. They take very good, pay a lot of attention to what they acquire and what they acquire it at. They do the ultimate cherry picking of the inventory. They're not out there buying bulk lists and tapes. That's what hedge funds do. They will still buy those larger portfolios of homes. Now, in some cases, they get great value by doing that. And if you don't know what a bulk list or tape is, essentially it's a list of homes from a bank that you're buying at steep discounted prices. The challenge with that is a certain percentage of that inventory will be underperforming inventory. So what you have is you have these funds that are buying up homes that nobody else would buy. Now, that's a good thing for you, too, as an investor, because it's raising the entire value of neighborhoods by picking up homes that have been vacant for a period of time. They then go in, buy them, clean them up, and it just raises the value of the neighborhood. And the third thing is that it might be, and this might be the most important thing, is hedge funds now provide an aftermarket for sellers looking to exit. At some point in time as an investor, whether it be 3 years or 5 years or 10 years, whatever your exit strategy is, you will want to sell your inventory at a nice rate of return. And knowing that hedge funds and other institutional buyers are in the marketplace provides for another avenue in which to sell your property. I took this off CNBC a year ago, March of last year, and it's still relevant today because some of the things that address it is still are relevant. While home prices still haven't hit bottom nationally, this is 12 months ago, we can now say that that is not the case. We have certainly hit bottom, and we're starting to climb back up. Any statistical analysis you read today will tell you that we're now on that cycle that we've seen throughout history in the real estate market of this cycle starting to come back up again. That's what you're seeing now. Demand is starting to grow, and yeah, it certainly did grow. In 2012, it was a very competitive year for buying REOs, buying distressed real estate. And then it says, especially for distressed properties on the low end of the market. By that we mean the hedge funds, groups like Summit, other specialized REO companies didn't focus in New York, or Los Angeles or San Francisco, or areas where real estate, yes, it did come down, there's great values there, but the strong rates of return and the opportunity for a long-term appreciation of those properties were in other markets, which is where Summit Assets Group is focused in. And then talking about large-scale investors getting into the market, we've already seen that. We certainly saw that in 2012 and certainly now in 2013. Then how does an individual investor get in without extra cash lying around? Retirement funds. We do many of these webinars. Actually, Lori and I have one scheduled in 2 weeks with Accuplan, who manages people's 401k, self-directed IRA. It's a great way to acquire real estate is through your self-directed IRA 401k. We do many webinars and groups like that that manage folks' retirement account or investment portfolio. It's a great way for someone to participate in the market. I'm now going to hand the controls over to Lori. Lori, again, I want to thank you for being here.
Charlie, I thank you for the opportunity and for making sure to share this with the investors so that they don't miss this marketplace right now. I mean, this is a once-in-a-lifetime opportunity, I think, for everybody. Okay, are you able to see my screen?
We can see your screen.
Awesome. All right, so a little bit about Summit Assets Group. You know, we're an innovative real estate firm. We started in 2008 when we saw the market was going to bring out all these REOs and opportunities to get cheap properties. And we built our focus in the Southeast, specifically in Atlanta. And not only do we provide premium cash flow investments, but we also have some of our investors who have asked us, is there a way they can participate in this marketplace without owning the real estate? So they want to be secured by the real estate and not own it. So we do provide some note investments for those type of investors. In addition, we connect with our active investors. There's people out there who don't want just buy and sell or buy and hold. They want to actually buy and sell. They want to do flipping. They want to do the same thing we're doing. And so we'll coach and educate them. We feel that the marketplace is big enough and can handle it, so we help people who want to do the same thing that we do. And let's see if I can get this to flip. Okay, so our history is since 2009, we've bought and sold over 1,400 homes, so there is some experience behind us here. Personally, I'm a mom of 4 children. My oldest is 17, graduating this month, and my youngest is 8, and we live on a little mini farm here in the Bay Area. And I grew up in a family environment of real estate. We would often move into what we called the broken houses, and we'd live there. We'd rip out carpet, hang sheetrock, and while all of my friends were walking the mall during the teenage years, I was learning how to rehab. I can mud a wall with the best of them. But it kind of spurred me to make a goal that someday I was going to own the mall. So I've been in real estate pretty much as long as I can remember. I bought and sold my first property in college, and I've been doing it since. We've done everything from single-family, multifamily, land development, syndication. You name it, we've tried it. So in this marketplace right now, in the time that we're showing right now, the best thing that you can do is buy and hold properties. And I've identified Atlanta as one strong marketplace that we can do that in. And so what I want to do is I want to show you why Summit is the right team to help you do that, why now is the right time, and then give you an opportunity to have a conversation with one of our investment analysts. So Atlanta is a large metropolitan population. They have 5.3 million people. And that doesn't say much except that you can see there's migration into the city. In the last 20 years, they've grown by 2.4 million people, and they're expected to grow another 2 million by 2030. As people are moving into the area, it's creating more jobs. They expect to add over 1 million more jobs. The median age is 33. They have 40,000 high school graduates and 24,000 college graduates. What that means is that you have a ready working base of people. Forbes magazine has ranked Atlanta as the #1 rental market. CNN has ranked them as the 4th best city to invest in. Forbes magazine has ranked them as the 4th most affordable city to live in. U.S. Economics has ranked them as the 3rd for job growth. And they still have the world's busiest passenger airport. And that's not the U.S. busiest, that's the world's busiest passenger airport. There are 15 Fortune 500 companies located in Atlanta, such as Delta, UPS, Home Depot. And they have a very, very diverse economy. One of the things you want to look at in a marketplace is what is the job creator? You know, is it one industry or is it several? If I say Detroit, Michigan, you're going to think cars. Or if I say Las Vegas, you're going to think gambling. The whole thing is, if either of those industries suffers, the whole economy in that area suffers. People get laid off, they can't pay rent, they can't buy houses. So you want to be buying in a marketplace that's creating jobs and that has a diverse economy. I usually look for 5 key sectors. I like to see jobs in the finance, in government, in trade, in health, and in information or computers, IT. And you'll see here in the Atlanta market, not one single industry is more than 30%, which is good, because if you have one that's more than 30% and there's failure in that industry, then you're going to see a potential for risk in your investment. The other thing that I look for in cities that I want to invest in is the city or the metropolitan area investing in infrastructure improvements? Are they building highways? Are they improving the quality of life? Here you can see Atlanta is putting together a $2.8 billion redevelopment plan. It's going to create 30,000 permanent jobs and 48,000 construction jobs, just this one project. Now, what you know is that around this project, developers are going to come and build nice homes, townhomes, things like that. So it's going to create additional jobs around it. The cost of living of Atlanta is very affordable. You know, we live here in the Bay Area, and things are quite expensive. A 3-bedroom, 2-bath home, 1,200 square feet, here is going to rent for about $2,400. I probably should update it. We're almost up to $3,000 for that. But in Atlanta, it's $900. So that makes it a very affordable metropolitan area to live in. It's actually the 4th most affordable city to live in. U.S. Economics ranks it as the 2nd best city to relocate to and the 1st U.S. city to run a business, less costly to run a business. Now, Atlanta has seen some great growth in the rents, and we're on our 4th year of rent increases, anywhere from 4 to 4.5%. It's expected again that they will raise the rents, or the rents will be pushed up another 4.5% in 2013. Now, Summit Assets, I have 7 employees here in the Bay Area and 40 team members on the ground in Atlanta. And if you combine just the employee years of experience in real estate, we have over 65 years. Everybody that works with me has been in the real estate industry for a while. If you ever see pictures of us, you'll see that there's gray hairs. We've rehabbed just 45 properties just this last year, in addition to what we've bought and sold. So there's experience to help you. There's experience when we make decisions. You know, and one of the things that Charlie had mentioned is that he helps us with the acquisitions. And we are picky. We know what we want. We know what rents. We know what will sell in the future. And so we pick the premium properties for our investors. So we have the experience to identify and avoid the known risks. We employ best practices to avoid creating any risks. And because we're connected in the industry, we have the top professionals that will help us navigate anything that's unknown that might appear. We have 2 guiding principles. The first one is to do it right, and do it right the first time. The second one is to make a difference. One of the things that is key for us in all of our operations is that what we do makes a difference. So if you take the fact that we take these houses that need rehab, they need to be renovated and fixed up, most of the time the houses are very worn down. The neighbors, you know, it's the eyesore of the neighborhood. The neighbors are frustrated. So when we take that house, we go in, the first thing we do is we clean up the lawns, we clean up the house, we make it look nice. So we're helping the neighborhood there. We're making a difference. We're putting it back on tax rolls. We're paying the HOAs that haven't been paid for years. And we're employing local people. So we're hiring contractors, inspectors, appraisers, bug people, termite people. And we're selling money into the local economy. But we like to take it one step further. When we sell our homes, we also donate a portion of our proceeds to a homeless shelter. It's called Community Share. They have a women's shelter and a men's shelter, and we give them a portion of our proceeds so that they can help the homeless get back on their feet, get a job, and get back into housing. So our process is that we locate a property, and then we determine if it's viable in the rental market. That's our first criteria, is it has to be rentable. Because if it isn't rentable, it's not going to make a very good turnkey for anybody. That's the whole idea, is that you're going to collect rent. So an example of what would be not rentable is if it's a house that's an anomaly to the entire neighborhood. Maybe it's too small. Maybe it's only a one-bedroom, one-bath. Or maybe there isn't even a neighborhood. It's just a house located on a street out in the middle of nowhere. Those things are critical. We want houses that have got curb appeal or can have curb appeal once we go in and fix it up. So as soon as we determine that it is viable as a rental, we make our offer, we do our inspections, we create our repair list, we buy the property, we go and we clean up the front yard, the backyard, the front of the house, the back of the house, everything so that it looks great on the outside. And then we start marketing for a renter, and we do all the repairs on the inside of the house. And we have it inspected before we pay the contractor, and before we put a renter in there, and before we sell it to you. Now, when we rent our homes, we're very rigorous in our screening. If somebody wants to rent from us, they have to prove to us that they have 3 times the take-home pay of the rent. A lot of people will do it on the gross, but a lot of times there's taxes or garnishments or things like that that come out of the paycheck, and they aren't spending that money. They can't apply that money towards the rent. So we want to see, do they have 3 times their take-home? We also look at their credit. Do they have anything on their credit like unpaid utilities? A lot of times if they have unpaid utilities, they probably had an eviction that's not showing up on their credit. We look at if they've had evictions in the last 5 years. If they have, we look at the condition on that. Were they in a house that was maybe foreclosed on? If that's the case, oftentimes we'll rent to them, but we'll ask for a double deposit or a triple deposit. When we move our tenant in, we do a walkthrough inspection, and then 90 days later we go back through an inside inspection on the property. And we do this for a couple reasons. One, we just want to catch any maintenance that maybe needs to be done. But we also want to kind of check out the housekeeping of the tenant to see if maybe we're going to have any problems down the road. We work with our owners by calling them every single month. All of our accounting, the keeping part of it, is kept online. There's 24-hour access 7 days a week. You can get your reports. You can see what's going on. But we believe in that extra touch of calling our owners every month. And often the conversation goes like this. Hi, Joe, how are you? Great. Did you get your report? Yeah. And then we ask a really important question. Did you read the report? Many times they'll get the report in the email and it sits there and nobody's looking at it. It's critical as an owner of investment to see that your investment's working or not working. And so we take that time to walk through that with our investors. I also have one of our ground crews drive by every single property every month, do an outside inspection, and report back on that. Most of our homes we sell on a 15-day escrow and usually for cash. Many of our buyers come to us with cash sources either from existing properties where they've taken the money out of, or they have savings, or they're using their retirement funds. Charlie had mentioned that we're going to be doing a webinar in the future with AccuPlan. There's a lot of custodians out there that can help you deploy your retirement funds into real estate. It's a great way to hold it. Our process is that you put a $5,000 deposit down, and you have 10 days to do due diligence. You can do whatever you want. You can get into the property, you can order an inspection, you can have somebody else go look at it, your mom, your dog, I don't care. And you know what? Maybe you and your wife talk it over, or you and your husband talk it over, you just decide, it's just not the time. The first 10 days, no question asked, we'll give you your money back. But then if you're ready to move forward, we'll Go ahead and move forward in the next 5 days. We'll close the property. And we offer you a home warranty that we pay for. It's a 12-month home warranty that will help cover anything that might come up as far as repairs and reduce your costs as an owner. Lastly, I want to point out that we're a one-stop shop. We employ all of the people on the ground to fix the property. And if something comes up where you have a question or there's a repair needed, you're not going to get any finger pointing from us. If you have a question on your taxes, you don't have to figure out who to call. You simply pick up the phone, you call us, we'll take care of it, or we'll point you to the right person, we'll call the right person, but you don't have to worry about trying to figure it out. We're here to help you. So I want to show you a couple of samples of our properties. This is one of our lower end properties. It's a C-class neighborhood, and it's rented for $8 1/4. And all of our homes are painted in the same colors. You'll see the Killam beige on the walls and the Swiss coffee on the trim. The doors are usually red if we can paint the doors. The outside of it also is a beige color with black shutters. Very classy looking. We fixed the homes to be move-in ready as if you were selling it to a retail buyer. And the reason we do that is they rent faster because they're not your typical white wall, white ceiling, white trim type house that you would see in the rental market. So here's another sample. This is like a B-class neighborhood. And then this would be like a neighborhood, an A-class or A- neighborhood. You can see that it's a newer home. And on this one, we were able to finish out the basement and add some square footage to the house. It made it very desirable for a rental. Now, the thing that's really important is that you're buying properties that fit your financial plan, your financial goals. And so when you call us and you work with us, we're not going to just hand out a list and say, here you go, pick it out. We're going to want to find out from you, what is your plan? Are you looking for income or equity growth? Are you a conservative investor or are you aggressive? Are you in it for the short term or long term? And I want to clarify, long term does not mean this year. For those of us that live in California, everybody thinks long term is maybe a year or two. Long term is 3 to 5 years, maybe even 7 to 10 years. Are you okay being a slumlord, or do you want pride of ownership? Are you looking for single-family, multifamily, syndication? Do you want to self-manage, or do you want somebody to handle it for you? These are some key questions that we want to understand before we even offer a property to you. Most of the investors we work with fit this type of criteria. They are wanting the growth of equity. They're conservative. They're looking 3 to 5 years down the road. They want a house that meets pride of ownership. They're looking for single family, and they want professional management. Now, you might be a little variation of it, and if you are, then we'll try to find properties that fit your plan. See, our goal for you is that you have 0 headaches. That's what we're here for. That's what our experience is for. That's what our team is here to do. Now, the key is timing. You can have all the right pieces, but if you're not in the right time, we can have failure like we did with the crash, right? The whole problem with that is people were buying when they should have been selling. I want to tell you right now is the time, and Charlie already alluded to it. He gave you many facts in the beginning on why now is the right time. One of the things that the hedge funds offer you is stability. When they're in the marketplace and they're buying, they're creating a stable buyer to keep the prices up. Everybody should be flocking to the door and buying everything that they can buy because the hedge funds are out there buying and creating a stable market for you. Right now, prices are still 60 to 80% of the replacement cost. Interest rates are at historic lows, and lenders are getting more relaxed, not more stringent. If you think back to when we had the bust, the reason we had the bust wasn't because people didn't want the properties. It was because they couldn't get the financing for the properties. And so now all of a sudden, if they had to pay cash for them or put more cash into the deal, it wasn't as attractive. More people weren't able to get qualified. So the lending criteria got more stringent, and because it did, the demand fell off, and because that demand fell off, the prices fell. So now if you look at the other side, some people are saying, well, prices are going up so fast, we're in another bubble. It's not another bubble, because what we have is lenders getting more relaxed on their lending. And because they're getting more relaxed, there's going to continue to be more buyers coming into the marketplace. The other thing that people forget is that interest rates now are so low and people are trying to get in before they go up. But what do you think is going to happen when they go up? A lot of people say, well, they're going to stop buying. But if we go back in history and we look at when rates start to go up and they continue to go up, people jump in with more vigor because they don't want to miss the opportunity to buy a house at the rate today, which might be 5%, instead of next year, which might be 7%. So don't be, don't sit there thinking that we're in a bubble. Right now is the perfect storm. Right now is the time to get in. So in Atlanta, there's less than 2 months of listed inventory. This is kind of the story you're hearing all over the nation. Banks aren't foreclosing. Hedge funds are buying. And there has been no substantial building for the last 6 years. So what that's doing is that's creating prices to increase. It's pushing the prices up. And a lot of times buyers will try to make offers and try to get homes, but they're just not going to get them. The key is to find homes that are off market. So if you're going to get into a marketplace, make sure that you're aligning yourself with companies such as ours or other companies that have got properties in inventory that aren't listed on the MLS. Now, some people will say, is it still a good time to buy because the prices have gone up so much? Well, it is, because the prices are still well below the peak and well below the rebuild cost. If you had to rebuild your house, the one we were trying to sell for $92,000, it was 1,600 square feet. We're selling it for about $57 a square foot. If you were to rebuild that with today's cost, it would cost you between $78 and $105. So are we overpriced? No way. We have a lot of room to go. So I hope that you were able to see why I'm so excited about Atlanta as far as it being the right place, what Summit can offer you, and why now is the right time. And what I want to do is offer you a free consultation. Either contact myself or Charlie and talk to us. Let us help you decide what's going to work for you. Maybe Atlanta is for you. Maybe it's not for you. But just at least give us a call and let us do a consultation with you. All right, Charlie, back to you.
Yeah, thank you, Lori, for that. That was great, as always. We've already got one question in the question box. Before I ask that question, just to remind everybody, if you type your questions into the right of the screen, there's a chat box there. You can type in your question. We'll be glad to answer them for you. Or we're going to leave Lori's phone number. Lori, I forgot to put my phone number on here as well, so I'll mention my phone number a couple times during this. So you can give me a call if you got questions. The first question we had was, do we have available inventory to look at now? The answer is yes, we do. We do have a list of available homes to look at. As Lori mentioned a moment ago, what we'd like to be able to do is to be able to talk to you for a few minutes, just a brief consultation, just to get an idea of what your particular strategy is. That really helps us in identifying what to show you in terms of inventory before we just, sort of blindly send you off a long list of available inventory. So, yeah, contact us, let us talk to you, take a look at what you're looking to accomplish, and then we can find something that fits. So with that, yeah, any other questions, type them in. I'll give my phone number out. If you'd like to contact myself, it's area code 714-312-0900. 714-312-0900. So with that, I'll just hit the mute button here, wait for some questions to come up, and we'll be glad to answer those for you. If you don't want to ask your question, again, you can just contact myself or Lori. Okay, we don't have any questions in the queue at all. We're going to stay here for another minute, though. Leave our numbers, our contact information up on the screen. Look forward to hearing from you. If not, we appreciate you all being on today's webinar. Lori, appreciate this. We'll be doing 2 more. Actually, we'll be doing 4 more of these the week after next. I believe next week you're in Atlanta, correct, Lori?
That's correct. Next week we're going to Atlanta and to look at some properties and show some investors around.
Okay, great. We do have a question that just came up here. Okay, the question is, Lori, what areas in Atlanta do you buy properties, especially for growth?
So if you were to look at the statistics, there's the perimeter. 54% of the people that live inside the perimeter are renters. And initially you might think, oh, that's great, that's where I want to be buying. But if you were a homeowner, where would you want to live? You certainly don't want to be living there. You want to live outside the perimeter. And so we focus on where first-time home buyers or, maybe mover-up home buyers want to live, which is the suburbs that surround Atlanta, that have got good school districts, that are within 30 miles of the perimeter, because people don't necessarily work downtown Atlanta, but they work at the different facilities that are on the outside of the perimeter. And so we focus in a lot of the different areas. Some of them are like Marietta, Lawrenceville, Snellville, Douglasville, Dallas. And then down south we do have some properties in Morrow, in Conyers. We have Jonesboro, Stone Mountain, and some of those areas. So we really have got some diverse properties depending on your investment desires.
Well, another question. What do you see in terms of price increases over the next 12 months? I think that question is meant to, do you see prices continuing to go up?
Okay, so when we started investing, it was just crazy. We could get houses for $15,000, $20,000. And then this year, those same houses are $60,000 to $70,000. If you look at the Case-Shiller report, it says that 2012 saw price increases of 16%. Some other reports say we saw price increases of 20%. And the projection is that we will see the same thing again this year in 2013, maybe with a little more vigor, because the hedge funds have moved in with full force.
Another question about insurance, Laura. What type of homeowner's insurance is required?
Yeah, it's just what you would do is you'd contact your current insurance company, see if they write a renter or landlord policy. And if they don't, we can refer you to some sources. So basically you want just a policy that covers the house and your liability as a landlord. Now, some of the insurance companies will try to sell you like a rental income policy. So if it's vacant for a certain number of months, you can get the rental income. You're going to have to make a cost-benefit analysis on that one. And then the other thing that I recommend is an umbrella liability policy that goes over all of your properties.
One more. In the market that you mentioned that you're buying in, what are your projections for growth?
Charlotte, can you repeat that?
The areas from the areas that you mentioned that you're buying in, what are your projections for growth? I think what she's asking is, what do you see in terms of appreciation of values in the areas that you mentioned? Okay,
so the areas we're buying in, I don't want to go and say, oh, you're going to see 20%. I have seen that the past 3 years. I've been seeing more than that, and it could continue. I think if you were to count on a 10% growth for the next couple of years and then drop it down to 8%, that would be a realistic approach to the growth, even though it might be more than that.
Any other questions? Okay, if there's no more questions, we're going to sign off. I'm going to leave the screen up here for a few moments. If you want to take down our contact information again, we'll give you a consultation, no charge, to get an idea of what you're trying to accomplish, and maybe then we can guide you through the process. I want to thank everyone for being on today. Lori, especially want to thank you for being on. Look forward to doing this again in a couple weeks.
Sounds great, Charlie. Thank you.
Thank you so much.